All right, all right. Hello, everybody. Today is Thursday, December 19th, 2024, the day after. Wow, what a wild ride the FOMC introduced to the market yesterday afternoon. I feel like we had a month's worth of trading activity in about 2 hours yesterday afternoon. Not going to sugarcoat it. A lot of our positions went the wrong way, and a lot of them went the wrong way hard. In fact, we got stopped out of four positions that we'll talk about in this session. And hey, it doesn't matter what you think. It doesn't matter if we think that this is temporary when the market's going to rebound from here. It doesn't matter if we think that. We still have to stick to best practices. We still have to close positions that have violated our stops. Certainly, perhaps there's a chance that we may regret some of these exits if the market rebounds. But I promise you that this is a best practice that over time, if you do it over and over again, over time, you will be better off for it. All right. So let's get that. We got that out of the way. Before we jump to any charts, let's drop the old disclaimer here that everything we discuss is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you are learning something along the way. All right. So I mean, the headline here is VIX, right? I mean, the volatility index VIX yesterday had an epic spike. Not quite the spike that we saw on August 5th, but very notable nonetheless. I think, I don't know the percentage term, but I think it was something like 75% pop for the end of for the final tally for the day. Obviously, we're back a little bit. We've come back quite a bit, but still at an elevated level. VIX with a 22 handle, that is still an elevated volatility, elevated level of volatility that we need to pay attention to. Now, like I said, we do have positions that we need to exit, and we did that today, and we'll get into it. Um, yeah, I mean, there's no way to sugarcoat it, right? I mean, we did have some good some positions that surprisingly held in pretty well, and we'll talk about those too. But hey, for those of you who are first timers here watching the options jam session for the first time, what we do here is we review any action amongst the trades that we have on in the All-Star Options service. We look at trades that we've exited, whether for a profit or a loss, and discuss any lessons that might emanate from that. We update stops on existing positions, stops that that are moving our way, or just we need to tighten up risk for whatever reason. We will update those stops, and then we will do a quick review of new trades we've put on over the last week or so. So that's what we do here at the All Star Options Jam session. So let's get into it. Let's I'm going to surprise you a little bit here, I think. Recently closed. I'm going to surprise, maybe not surprise, surprise might not be the right word, but let's start with some good news because believe it or not, in some of the trades that we exited in the past week, there is some good news. So let's start with the headliner, CM, which was one of our top three trades of the year. All right. This was a position we've been riding since August. We bought some December 55 calls back in August for $1.05, right ahead of earnings here about 2 weeks ago to protect ourselves from any adverse reaction. We didn't want to, take too much risk having ridden this thing for so long and having so many open profits. We didn't want to risk giving too much of it back on a bad earnings call. So we rolled our calls up $10 to the December 65 strike and took $6.80 credit out of the trade, locking in guaranteed gains. But hey, we still had calls at the 65 strike for any further upside from there. And we got that, thankfully. For 4 or 5 days, it was looking pretty good. But on this day here, December 17th, we traded below our updated stop level. We were raising our stops as we were going towards expiration. And we closed the remaining calls out for $1. Ultimately, all in, if you're thinking in percentage terms, we made 743% on this initial investment back in August. Not bad, right? They're not all like this, of course, but 2, 3, 4, 5 trades like this a year, and it makes your year. And we'll review this stuff next week. We'll do a little end of year portfolio review. And as is normally the case, there are 5, 6, or 7 trades that really account for all of our gains for the year, and we'll review that. But CM was definitely in the top three. So congrats to many of you who rode this with me and stuck it out till the end. I know we had a bunch of people here in early October that were itching. They were itching to get out. They didn't like this pullback. I had a lot of chatter in our chat room. People were getting a little nervous. I think some of you maybe even pulled the trigger or took some off the table. That's fine. You have to do you, right? You have to do what makes sense for you. As long as you're following best practices and following a plan that you've laid out, great. But for those of us who stuck out this little pullback here, we were rewarded handsomely. So there's some good news. Hey, and we have more good news, believe it or not, even on a trade that we exited this morning following a ugly, ugly red candle here in IWM. Check this out, guys. This was a great trade, even though we got caught in this wash right here. Back on, what is it, November 19th, I believe, we entered a risk reversal. So we sold the March 225 puts and used that credit to pay for the 240 calls. Okay. We got 50 cents on day one. We were 50 cents to the good when we put the trade on. So we already had a credit embedded in the trade. I mean, our timing could not have been more perfect. This thing, IWM just really just shot off almost immediately from when we got in, which is fantastic. And up here on November 26th, as was our plan when we laid it out on day one when we put the trade on, we sold half of our calls and covered all of the naked short puts, which, hey, turned out to be a really great call. Who knew? But we did that and we still had a $3.12 credit left over. So let's say you did two lots here, right? You sold two puts and you bought two calls. All right. You collected 50 cents up front. That's times two is a dollar. But then you collected 312 when you sold half of the calls and covered all the puts. Your net leftover was $3.12. So that actually 312 adds to the 100 or the $1. So now you're looking at a $4.12 credit guaranteed, right? IWM could have gone to zero because we don't have the naked puts anymore. IWM could have gone to zero and we would have been left with a $4.12 credit. Awesome, right? Well, yesterday we closed below 225, which was our updated stop. So we exited this morning shortly after the open, and there was still plenty of premium left in those calls, right? I sold them for 449, and that 449 is gravy. That's on top of the already guaranteed profit we had. So all in, you earned $8.11 per lot. Okay, that's a great trade. It didn't end the way we wanted it to. I mean, it was really setting up to be a banger, right? I mean, if IWM continued higher here, this could have been a really monster win, a nice way to end the year. They don't all work out that way, but we're sitting in very nice profits. So we're out of IWM. That sucked. But hey, it was a very nice trade for us. Now, see, there was some good news, believe it or not. On such a bad day, such a bad week, but hello, we made some money. All right, now let's talk about the bad news. And the bad, none of it was really all that bad, okay? In no particular order here. Let's talk about P-Core. We actually got out of P-Core earlier this week, thankfully. We were not in this trade for very long. We got into this trade just a week or so ago, 2 weeks ago. We bought a call calendar spread. We shorted the April calls and we bought the July calls. The strike on these was 100. I should have had that in there, but there was a 100 strike that we were doing for P-Core. We paid 225 for it. Well, the stock had other ideas. It just rolled over on us. It got ahead of the sell-off that we had yesterday. So we closed below 79, and that was my signal to get out. And we got out for $1.82. Not terrible, right? We paid 225 for it, got out for $1.82. Small loss. I love those kinds of losses. I'll take them all day long. All right, now here's the rest of the stocks that got caught up in the wash yesterday. We exited this morning. USB, US Bank Corp. We bought the March 50 calls for $2.30 back on October 15th. It was looking great, like many things. But yesterday we had a terrible close, still below that this morning. Got out for $1.78. Not terrible. Again, right? Kind of like P-Core. Not terrible. We paid $2.30. Out for $1.78. I say this every time, guys, but with these defined risk trades, I'm always sizing my position for the very, very real possibility that I could lose everything on that trade. It could be a zero. And so if I don't get out at a zero, that I consider that it's not a win, but It's the kind of losses I love. So I paid 230, got out at $1.78. Moving on. That's awesome. All right. Royal Bank of Canada. Man, I had really high hopes for this trade. I thought it was going to be a nice rotation from that CM trade that was our big winner into the next Canadian bank that's going to take us higher. Well, unfortunately, Royal Bank had other ideas. Thankfully, it was a quick out. We got in for 350. We bought the July 165 calls for 350. We closed this morning for $1.80. Okay, we're out. Finally, MCO, Moody's Corp, another financials business, data financials. We got into this trade in early December. We bought the May 550 600 bull call spread. We paid 850 for it. We had a stop at 483. We flirted with it on Tuesday, but yesterday, no, there was no argument there. Definitely closed below, and we got out of this trade this morning, and we got out for 338. So we paid 850, got out at 338. So, hey, look, we had a mix of good news, had a mix of bad news. I talked about it on the morning show this morning. If this, whatever you want to call what's happening right now following the Fed yesterday, if this turns out to be short term, which there's every reason to believe that it could be, right? If this turns out to be a short-term little blip on the radar, the nice thing is that it's allowing many of our charts and many of our positions to reset. And by reset, I mean identify new higher levels of support that we could down the road adjust our stops higher to, because those will be the significant levels that we need to lean against going forward. So speaking of that, let's get to the updated stops. We only had two updated stops this week because not too much made much headway since last week, as we know. And even before yesterday afternoon sell-off, we've been talking about it amongst the analyst team for a couple of weeks now. Is we've had a significant under the hood deterioration in stocks. We've seen decliners outpacing gainers for, I lost tracks at 8 days in a row, 9 days in a row, something like that. So under the hood, we had definitely seen some deterioration, and that's been reflected in many of our positions. So we have not had an opportunity to raise too many stops. But hey, Apple, look at this. Apple's doing pretty well. Apple's hanging in there. Apple's just a kiss off its all-time highs. So Apple's hanging in. I like it, but I'm raising my stop to 236. We've got this rising 50-period moving average, 50-day moving average coming up below it. We'll meet it at some point this week. I don't want to see Apple get below 236. 236 also corresponds with the upper resistance level that was in place for the summer. So 236 feels like a significant level. I don't want to see Apple get below 236. If it does, we will exit our long December 300 calls position. This is December of next year, by the way. This is a long play. Next up is Microsoft. By the way, oh yeah, I do have that in. Okay. Microsoft. Microsoft got caught up in the wash yesterday, but I feel like it kind of held where it needed to. I mean, we'll see. We'll see. But I'm either way, I'm raising my stop here to 425. We're going to start running out of time on this trade, though. These are January options. Our spread is slightly in the money right now, so we're still sitting on a winner. But come January 1st, we're going to have to start really aggressively tightening our stops because we don't want to give too much back. But for now, 425 is the new stop in Microsoft, which kind of corresponds to where the 50 period and the 200 period moving average are both kind of hanging out. So that definitely feels like a level we don't want to lose, right? So that's all we got for updated stops. Just two. Often we have more, but for now, we just got two. And then lastly, we will touch upon new trades we've put on since we last spoke last week. And they're actually hanging in pretty good here. I mean, here's Uber. Uber, I like the way Uber traded yesterday. Considering everything that happened yesterday, Uber actually closed up on the day. Yeah, it was up a lot higher and it gave a lot back, but at the end of the day, it closed higher. It was one of the few stocks that was up on the day. So I like that. Steve Strauza and I put this trade on. We thought that this is a logical level for Uber to dig in here. But it's a defined risk trade that we have on. We could be wrong. Our stop is at 60. We're not too far from there right now. If it closes below 60, we'll be out of this thing quicker than you could say, get out. right? But if the market holds steady here today, if we finish the week without any more further calamity this week, I feel really good about this Uber trade. But we do have a long position on Uber. By the way, I don't have the trade details on here. If you want the details for these trades, please go to allstarcharts.com and head to the members section, head to the options section, and you will find detailed trading plans for every one of these trades that we put on, why we like the setup, how we're trading it with options, how we're managing risk, where we may or may not be taking profits. All those details are there. What? You don't have access to All Star options at allstarcharts.com? Maybe you should get involved, huh? Shoot us an email, info at allstarcharts. We'll get you hooked up. All right. Next up, Aurora Innovation. This company, I kind of have a soft spot in my heart for this company. This company makes the technology that allows self-driving cars, amongst other things, I believe, too. But self-driving cars. Hey, I've got a self-driving car. I mean, I have a car that I'm currently enjoying a 3-month free 3-month test of the self-driving. If I like it, I have to pay for it going forward. I like it though. It's really great. I didn't think I would like it, but I really do enjoy it and it works really well, surprisingly well. I don't have to take over steering too often. Sometimes I do, and that's probably more on me than the car, but maybe I'm just a little nervous about the way it takes some turns sometimes. But I mean, I give it a 9 out of 10, right? I think it's great. So Aurora Tech is behind that. And at the end of the day, we don't care, right? We don't care about the fundamentals. We don't care about the story. We're chartists. We're technical analysts. We just care about price action. And we like the price action of this stock. And we got in a few days ago. It got caught up like everything else yesterday, but it's hanging where it needs to hang. And I like it. But we do have a bullish position on there in Aurora Innovation. And lastly, NVIDIA, we put this trade on Tuesday during the Flow Show, me and Straza. We like NVIDIA here. We like it to dig in, similar to Uber. We think it could dig in. And if this bull market's going to resume higher, we think that semiconductors are going to lead the way. And so if it does, NVIDIA is the poster child for the semiconductor. So really, NVIDIA, I mean, the two things we like about this trade, the two reasons why we wanted to put this trade on is one, we think that the bull market's going to reassert itself, and we think that semiconductors will lead the way. And obviously, NVIDIA is the leader in that space. So I like to be in leaders right now. Secondly, this trade is information. I don't know about you guys, but I tend to pay a little bit more attention to stocks that I have a position in, right? If I got money on the line in a stock, I'm going to pay a little bit more attention to say something else like, some random altcoin that I don't care about, right? I don't have a position in it. So what do I care? That's my attitude sometimes. And so I like having a position here in NVIDIA because I think NVIDIA is the bellwether in a lot of ways. And if NVIDIA fails here, if it breaks below 125 and makes a run towards this 200-day moving average, that's a bad omen for semiconductors, which in turn is a bad omen for the ongoing bull market. So I got a position on an NVIDIA. For me personally, I kept it small. I did it a little bit smaller than I normally would because I'm actually more interested in this trade for information. Of course, if it works, it's going to work well. We're going to make some money. And again, all those details are available on the blog. All right, everybody. Here are the updated stops just as a review. I know some of you like to take screenshots of this. We only had 2 today, so no big deal. So there you go. Pause the show if you need to. Take your screenshot. And lastly, as always, if you have any questions about anything we've discussed here today, you can send me an email at info@allstarcharts.com. That'll get routed to me. I will happily answer you if I can. And if you want to get involved in All Star Options, there's the link. Get involved. We have a great community. In addition to all the trade ideas that I share with you and the help that I give you along the way, we have a great community of people who are involved in All Star Options, subscribers like you, who are all engaging with each other, sharing ideas amongst each other and me, getting my feedback, getting other people's feedback. It's great, and it's getting better every month. If you want to be a part of that, get involved, get All Star Options. And lastly, if you like my charts, trendspider.com is offering a promo code Sean50. You get 50% off a subscription plan to TrendSpider charts. Pretty awesome. All right, folks, that's all I got for you. Have a great rest of your week. We're into the home stretch of Christmas for those of you who celebrate. So be well, enjoy the holidays. Let's keep it together here. This market's get a little slippery. It's going to challenge us, but we got this. We got this. Take care, everybody. We'll see you next week.